Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for February 25th, 2024. Now, last week I said the markets were a little stretched. Guess what? This week they're more stretched, and this week we face the risks of a blow-off top. And I'm going to talk about that and more here in just a few moments. Matter of fact, I'm going to talk about that, the markets, everything that's happening this next week, kind of some of the landmines to look out for, and then also I'm going to give you my best trade setups and review last week's best trade setups as well. So make sure you guys and gals don't go anywhere. And once again, or let me just say this, if this is your first time here, if you like this video, make sure you give me a thumbs up, give our team a thumbs up, subscribe to the channel. It's free to actually subscribe to the Forex Analytics channel, and it's also, if you click the bell icon, you'll be notified every time our team uploads a new video. For those of you that listen to this show regularly for the last 7 years or 8 years or so, make sure you give me a thumbs up. You guys know that makes our team feel really good for doing this over the weekend every week. So for the last 7-8 years. So make sure you do that. Thank you very much. All right, let's talk about last week and let's talk about this week. So last week I said the markets were a little stretched. This week they got more stretched, and matter of fact, as I was just saying, I've had this discussion with not only you guys here over the last couple of months, but also on the trade-off. I'm like, we could be building into a blow-off top type of situation in the market. Then what does that mean? Well, that means that there's so much FOMO, or fear of missing out, especially from an institutional or fund level, that the markets are just chasing higher at this point. And you're getting to that point where valuations don't matter. You really can't argue a bearish argument. Everybody's chasing returns right now, and the market could accelerate higher at this point. And it's not just me that's been saying this over the last couple months that it could develop, but now, and I'm going to pull up a post from Zero Hedge on Friday. It points out that Nomura Bank also sees the potential of a blow-off top in the markets, and they post a chart here on Zero Hedge. The reason why I bring that up is not so much to note Zero Hedge. Zero Hedge always tends to put charts like this, but it's more importantly, it's banks are actually identifying it too. And so what does that mean for the markets as a whole? Well, when you're dealing with equities, and I've witnessed just a few capitulation type of moves or blow off top moves over the last 20. Let's say I sat on my first trade desk in 1996, so we're talking literally 28 years. I've seen only a few handful of times where the market actually blows off the top or a capitulation type of move. It's not very common, but what happens is everybody's chasing the market one direction or the other, and then that usually signals some generational top or bottom in the markets. If you look at crude oil back in 2007, 2008, you'll see a move like that. The dollar Canadian back below like 88 cents, back around that time. There's very few situations where this does happen, where people blindly just start buying things. And that's kind of the situation that we're in right now. And the reason why I want to have this conversation with you guys is because I've been having conversations like this all week long, where people will ask me, what does it actually look like? Well, for me, I want to see a very big move intraday that is completely reversed. And when I say a big day, I'm not talking, and let me just pull up equities here, and let me pull up our charts that we use here on the week ahead video. You guys know on the week ahead video, I exclusively use majority, like 95% of these charts just for this video. So this way you can see how everything's used and what everything looks like from one week to the next. When I talk about a big move intraday, I'm talking like literally 4, 5, 6, 7, 8% intraday. Now you think about that, like we're at 5,100 in the S&P. If we trade up to like 54, 55, 5,600 intraday, like literally in the morning, and then we give that all back by the end of the day, so by the end of the day we go negative, that is the top. In my opinion, it's probably 90% chance that we reverse. So if you see a move that looks like this intraday, and then all of a sudden we close down at the lows, that signals that we probably have marked some sort of generational 20, 30-year high that we just don't see anymore. And you know, I've talked at great length. If you listen to the F.A.C.E shows, or you listen to our shows that we have private for, you know, the Forex analytics community, I've talked about the risks of that in the last couple of months. And this is the first time I've really, you know, kind of jumped out and said, look, we're almost there, and it's really building at this point. And it's not something that I take great pleasure in either, because of my age, being over the age of 50, and, you know, you could say maybe 15 to 20 years from retirement. You know, that's not the kind of action I personally want to see in our equity markets. I don't want to see a blow off top, because I know if we do make a top, it's going to be very difficult for us to overcome that in the years ahead. You know, whether it is fully 20 years ahead, it's just not something that I take great pleasure in saying. But it's the reality is the market that we're dealing with is something that you know, you just don't see all the time. And that's a scary thing. And the last time, you know, you've seen something like this is back in the .com bubble, which I did trade through, and I traded equities in the mid 90s to late 90s and 2000, 2001, only trading .com or technology stocks at that point. So I've been through it, I've witnessed it. And I see a lot of the same genetic makeup in this market. Now, if you argue, you know, oh, valuations, they don't even matter. You're right. You know, you look around and you're like, look, the Fed, they're in a very good position right now. They've got a lot of ammunition to actually cut rates should something go wrong. Earnings are great. You saw NVIDIA blow out earnings this week. I mean, what's not to like about NVIDIA aside from the price action? You know, and I say aside from the price action, I mean, we've rallied substantially, but we're giving these gains back on these substantial rallies. These are scary type of moves that tend to mark major tops in the market. And, you know, there's a lot of people that are arguing there's not going to be a recession. There's no recession. You know, everybody was anticipating it last year. And the problem with that whole situation is you have so many macro analysts, big name macro analysts that, you know, showcase their work on CNBC, Fox Business, Bloomberg, all of 2023 that were extremely bearish. What do you think that they tell their clients all last year and this year? Well, going into this year, you know, going to be a recession. Things are going to turn, you know, get out of your longs, you know, prepare for the worst. And the worst never came. So now these institutions have been listening to macro analysts, the majority of them, I say majority because there's a few standouts that haven't. They have been preparing their clients for the worst, and now their clients are chasing the markets higher at the beginning of 2024. This is a very, very scary recipe for disaster, because everybody is chasing the market higher because they have to, for returns reasons. So why do I say all this? Because, you know, we as traders have to be prepared for a potential turn in the markets, which may not, you know, I had this, and I'm going to get in, don't worry, I'll get into what's happening this week. And remember that this video is chaptered, so you can kind of fast forward through and go through this. But this is important information that I'm giving you. You know, when you look at the markets and you look at where we're at, I mean, theoretically, and this has been my opinion this week, I've told our traders, look, you could probably sell the S&P here and close your eyes and open them up, you know, 6 months from now and say, oh, look, I shorted the market today. 6 months later, I opened my eyes and I said, oh, look, we're trading much lower now. Great job. That realistically, that's pretty possible. The problem is we may be trading at 5,100 right now. I don't know if we go to 5,500 or 6,000 before things turn. And that's why you and I as traders, we have to have our eyes wide open and be watching price action very carefully. You know, if you want to get mine and the rest of our team's daily analysis every single day, you can go right to our shows, and they're free, right? You go over to where we have webinars on Forex analytics. We have the Flow show, that's a European show that's in the morning. I'm not awake for it. I'm sleeping during these hours. Ryan Littlestone came in. They guide you through the markets, what's happening, what's happening with rates, what's happening in the bond market, what's happening in the dollar, what's happening in European markets. Then the F.A.C.E show, every day you can come listen to myself and the rest of the team talk about how we feel for the day. So we'll keep you up to date. Just make sure that you're plugged in, because these are the times in the market you really, really need to be aware of what's happening. Okay, I'm going to continue on. This week we have month-end flows. Remember, the 1st of March is actually on Friday, so that means we're going to have end-of-month flows. Some of the banks that we've been getting news from suggest that there's going to be some dollar selling at end of month, which makes sense. Everybody's reallocating inflows into equities. There's going to be dollar selling to make up for that the inflows you're seeing from equities. So expect some dollar selling. That's expected, but that doesn't mean that's what we're going to get. But that's what banks are suggesting the end of month. So on the end of month flows on Thursday, you might see them start working into dollar weakness. Wednesday, Thursday this week. But let's start with Monday. So on Monday, and let's go to the charts that we normally talk about, and we normally go through. So first thing, kick us off Monday morning, you're going to have Norwegian employment. Now, I have been following the U.S. dollar Norwegian krona quite actively, because it is holding up very well. This is going to be the theme in currency markets. When you're looking at, and let me delete this right here. When you're dealing with currencies, and let me remove my face here. When you're dealing with currencies, what tends to happen in a risk-on environment, when stocks are moving higher, the dollar tends to get sold. So you can see, the U.S. dollar Norwegian krona has moved down, but it really hasn't moved down quite a bit compared to what's happening in equities. Because if you look at the S&P and you look at this divergence, and the S&P is in orange, what happens is when stocks go down, typically the US dollar Norwegian krona is going to fall. But what happens when it doesn't? What happens when S&Ps are up here? Well, if the S&P should correct, the US dollar Norwegian krona is going to play catch up, kind of like what you see here when the markets reconnect after diverging, right? So if the S&P does come down, the US dollar Norwegian krona may actually reverse higher in the weeks and months ahead. Now, we are dealing with Norwegian employment, and I want to show you something specifically with the US dollar Norwegian krona, just so you're familiar with what's actually happening here. We had an ABCD correction. Okay, you'll see this equal leg move, right? Let me just show you this. And since we talked about it this week, if you were listening to the shows, especially the Morning Edge, because we talk about the U.S. dollar Norwegian krona every day, what you're gonna notice here is major support came in right at the 50% retracement. We had a spike low and false breakdown, which has led me personally to being long the US dollar Norwegian krona. So I'm just letting you guys know that's a position that I happen to have open right now due to this formation that we saw this last week. Now, if you want more of that information, you can always go into the Forex analytics chat room, which is right here, right? And I'm not going to do that because I've already got it open right here in this window. So let's clear that, and you can see, let me pull that up for you. Here's the chat room. And you can see our general chat room, you can see the trades room, you can see positions that not only myself but other traders are taking throughout the course of the day, and we highlight exactly what we're doing here. So if you want to know exactly what I'm trading, you can go in the chat room and find out. So moving along, US dollar Norwegian krona employment numbers on Monday. Now on Monday, we're also going to have US new home sales. It's important to watch new home sales in the US because I think that those numbers are going to get better as mortgage rates have been slowly coming down. I want to see the new home sales stabilize, and the dollar might be responsive to that early this next week, and that will be on Monday. So Also, what's happening on Monday, and let's talk about the dollar index really quick technically. What you're going to notice, and let me delete a few things here. Let's delete some of these fib levels. Okay, let's remove that. Let's remove that, and now you can see a bunch of lines, right? Let's remove the head and shoulder pattern. Now, this blue line right here would be the neckline of an inverted head and shoulder pattern. Okay, and let me redraw that. Right? Now, the inverted head and shoulder pattern, I'm just going to put the shoulder somewhere around here, would suggest that we move a lot higher as long as we can hold above that blue line. Now, why is that blue line so important? Well, let's go ahead and take this low here to the high, and you'll notice that 38% retracement comes in right around that low. That means while the dollar index is trading above 103.30, that's going to be very, very important support. So while we're holding above this blue line, the dollar still has a chance of rallying. We start getting below 103.30, and that's going to be kind of negative for the dollar. Now, I don't think that new home sales is going to be the catalyst that drives the dollar below there. I think if we do drop below that level, it'd be because of end of month flows. So I just want you to think about that as we move along. All right. Also, one of the other things that's happening on Monday, and actually this week, that I didn't mention a little bit earlier, this week we have 163, let me make sure I got that number correct, 169, not 3, $169 billion worth of issuance coming out. There's 2-year, 5-year, 7-year notes, and then also some shorter term 3 and 6 month, I believe, is coming out, is being auctioned off. Monday, you're gonna have the 2 and 5-year note auction. So let's go over to yields. Here's one of the things that, in my opinion, is holding up the dollar and from breaking down, is that auctions, if you will, and here we'll just pull up the 10-year yield. Okay, auctions have been, kind of in the spotlight, and that's keeping yields higher at this point, right? And if these auctions come in a little poorer, yields are going to rally to try to attract more, buyers of these shorter dated maturities. So you got all these note auctions this week. So watch yields. While yields on the 10-year are trading above 420 or so, roughly, that's going to be pretty critical support. We start getting below there, this double bottom that you see may not complete, but there's still a lot of room when you're talking about yields on where they can go. They can, in my opinion, they can go up to 450 because this is a double bottom that we've been discussing here. You see a double bottom, that projection lends us to believe that yields are going to move higher. And if yields move higher, that means the dollar is going to be more than likely very well supported in a situation like that. Okay, moving right along. On Tuesday, we have durable goods orders. So, keeping in mind it's going to be very, very reflective of what happens in the dollar. And we also have the consumer conference board, consumer confidence. We also have a 7-year note auction. Now, what also happens on Tuesday is at 8:30 GMT, 1:30 p.m. Eastern, Banxico is going to release its inflation report. Now, you guys know I've had a lot of focus on the US dollar Mexican peso. It hasn't moved yet. But typically, when stocks go higher, emerging market currencies strengthen. That has not been the case. Now, the inflation report is coming out on Tuesday, which may confirm that a rate cut is coming in Mexico this next month. If that is the case, and it confirms that, you might see the dollar Mexican peso break away from this consolidation that we're seeing. Now, if that's the case, that means the 200 DMA comes into play, which is at 1728. If we start breaking above 1728, next thing you know, we're challenging 1740. And then, if stocks actually move lower, that's just going to add fuel to the fire to the US dollar Mexican peso higher. So watch that inflation report. Again, it is Tuesday at 1:30 p.m. Eastern or GMT, it'll be 18:30 or 6:30 GMT. All right, so just keep that in mind for Tuesday. Tuesday night, we have Australian CPI. Now, Australia is going to be a topic of conversation for me as we get towards the end of this video. But you can see the US dollar, or the Aussie dollar has been trying to move higher with risk. Risk appetite is the only thing, in my opinion, that is supporting the Aussie dollar at this point. You have China trying to do everything they can to support their equity markets. You have stocks that are moving higher, and the Aussie is being dragged, kicking and screaming, moving higher. Well, Tuesday night, I say Tuesday night for me, but it's actually Wednesday morning in Australia, you have the Aussie CPI. Okay, so that's going to be really a mover in the Aussie dollar. One of the other things that's supporting the Aussie right now, if you don't know, is the breakout in the Aussie yen. The Aussie yen has been breaking out, which is providing, positive Australian flows. The flip side of that is, you guys remember one of my trade setups from 2-3 weeks ago is the Aussie New Zealand, which has broken down quite aggressively over the last 2 weeks, right? After shorting it up here, it has broken down, and that's providing Australian selling. So the Aussie dollar is kind of getting pulled in a couple different directions, but I believe that we're just consolidating around the 200 DMA. I think it's setting up this week. So Aussie CPI, then what else is happening Wednesday morning is we're going to have the RBNZ rate decision. Press conference is going to be 1 hour later. Now, when you're talking about the RBNZ, there's from what I've been reading, there's a 25% chance that they raise rates. They're really one of the only G10 central banks right now, G20, G10, anyway, they're one of the only central banks that the market is still pricing in a potential rate hike. All right, now there's obviously risk that they're going to be very hawkish even if they don't raise rates. So the RBNZ is going to be very much in focus this week, Tuesday night or Wednesday morning if you're in New Zealand or in Asia. So watch the Kiwi. Now let's stop here really quick and let's do a little bit of work. Let me delete that and let me take my face off here real quick. Now if you just look from a simple high to low, we have retraced 50% of this move. So my opinion is major resistance is going to be right here at the 618 retracement. Okay, and what's actually going to be more important, whether we break above 6250 or just break back below this support right here, or as we were discussing the 50, that's the 50 DMA. If we break back below there, is going to be more to do with what happens with the RBNZ. If the RBNZ is starts to lead the market down the road that, hey, maybe they're not going to raise rates, okay, then the RBNZ or the Kiwi is going to fall. Obviously, if they raise rates, the Kiwi is going to rally higher. But I would expect that any rally is going to be very limited, because now the market's going to say, okay, rate hike, we got it. We were expecting it, 25% chance. We have to reprice a little bit, but from here on out, they should be cutting rates. So I would think that any upside might be limited. However, we could break above the 618 retracement. Anyway, for all intents and purposes, it's going to be a very volatile Tuesday night, Tuesday night, Wednesday morning in New Zealand. So keep your eye on the Kiwi. Now, moving right along, on Wednesday, we have preliminary GDP and GDP price index in the US. So preliminary GDP is going to really let us know as the market if we are really on pace to avoid a recession. So that preliminary GDP and the price index too, because obviously inflation is on everybody's mind after the last couple of weeks CPI and PPI numbers, which we will get PCE this week. Everybody's going to be watching the price index too. So that comes on Wednesday. Wednesday night we have Australian retail sales, and Thursday again, it's the end of month flows are going to be hitting the market. Now I want to talk a little bit about the dollar yen, because the dollar yen still is grinding higher and it still looks bullish. But look at how much of a risk it is if the dollar yen starts breaking 151 and then 152. Now, why is 152 a big deal? Well, 152 is a big deal because if you go back here to September of 2022, there's 152 basically, and you keep scrolling back. Oh, sorry. Yeah, right there's 152, and then right here is 152, and then you got 152 that we're coming up. So whether we get a triple top or an actual breakout, which you guys know my flag pattern points to 154 if you've been watching this week ahead video or our daily shows, that's ultimately where I think the dollar yen is going. The dollar yen may be influenced by all of the auctions this week, but also the GDP numbers that come in on Wednesday. So just keep an eye on the dollar yen. It still looks very bullish while we trade above this 149.50. All right. Thursday, we're going to have Norwegian retail sales. We already talked about the US dollar, Norwegian krona. Let's go into the euro really quick, because the euro has preliminary GDP, German CPI, excuse me, on Thursday. So as far as the euro goes, the euro is, I want to just kind of stop for a moment and just talk to you about the price action in the euro. It's a lot like the Aussie. It's grudgingly going higher. You know, you think equities go up, sell dollars, deploy dollars into other things. You know, whether it's the Australian dollar, Mexican peso, South African rand, whatever it is, you know, sterling. I'm buying something, but I'm not going to use dollars. I'm going to use dollars as a funding currency. Well, you could also argue that the euro is quite a funding currency as well. Notice that these spikes are just being met by sellers. And most economists you talk to, and probably the ones that you listen to, will tell you the same thing. Europe's got a whole mess of problems. Growth is really slow. You know, there's no way the European Central Bank's going to raise rates. Well, you know, preliminary German CPI data, that's going to be closely watched. But notice that the 50 DMA, we rallied to the 50 DMA, smacked right back down. Can't even close above the 200 DMA in the euro. So my guess is, obviously, a move back below 108 is going to be pretty bearish, but really it's going to be a move below 107, because 107 is the longer term. You can see it right here. I'm going to just move it a little bit so you can visualize. That's the 618 retracement that comes in at 107.15 roughly. So a move back below 107 would be extremely bearish for the euro. All right, moving right along, we have Swiss CPI Thursday morning. Most of you should know I'm very bearish Swiss francs, and I've been playing. It's been the trade that I've been in since the end of December. You know, I'm short Swiss francs and I'm long everything against Swiss. No, that's not true. I'm actually long Euro Swiss, but I'm playing this to the long side, and I still think there's more to go here. So Swiss CPI is going to be very much in focus Thursday morning. You have Canadian GDP on Thursday, and you have US PCE. So let's take a look at the US dollar Canadian. So the dollar CAD, it's been hovering around this 134.50 level on the 200 DMA. You can see we're not getting far away from it. But, you know, can Canadian GDP be the data point that drives the Canadian dollar lower at this point? You know, if you listen to Trader Summit, let me pull over this site really quick. This is a free site for any of you guys to go to. This is tradersummit.net. An interview I did with Adam Button this week, which is the chief currency strategist over at Forex Live. He's very bearish on the Canadian economy. You should watch this interview. Matter of fact, you should watch all these interviews. You want to see K-Man from our team right here, Beat. He's great risk manager out of the UK. Bill Baruch, Jim Welsh, I do an interview with him every week. This is such a great resource for you guys every day. But watch this video with Adam Button right here if you're curious about the Canadian economy. Anyway, what I think should be in focus with the dollar Canadian is just if we can actually rally past this one. This is 135.90 right here. If we can get above that, then we should start challenging some of this resistance. And if the dollar CAD starts to break above here, that becomes really quite bullish. We have US PCE. Everybody's going to be watching PCE everybody's going to be watching PCE on Thursday, but PCE tends not to be a huge surprise to the market, even though it's the Fed's favorite inflation gauge. We've already got most of the components from CPI and producer prices to make up the PCE, so it tends not to be too much of a surprise to the market or the Fed, but we would expect that that is a fairly strong or sticky number. We also have U.S. Employment claims on Thursday, and Thursday night. One of the other things that we should probably be watching is, let me see if I can find the US dollar CNH. I should have it up here somewhere. Well, I'll just pull up the China 50 really quick. We have Chinese PMIs. We have services and manufacturing PMIs that come out on Thursday. And you guys probably know this, the Chinese markets, even though they just came back off of Lunar New Year this last week, they have been trading very, very bearish, and you'll notice we're right at the 200 DMA. So I would think that, you know, these Chinese markets are coming into some pretty key levels of resistance. If that data comes in weak, which, do you believe Chinese data? I don't know. But if that data comes in weak, you might look for the Chinese markets to roll right back over around the 200 DMA in this descending trend line. Now on Friday, we have Eurozone flash CPI estimates, and then we're going to have on Friday, I should probably go back to the dollar index really quick, because this is going to be a market mover. No matter where the dollar is at by the end of the week, getting past all the end of month flows, you will have ISM manufacturing PMIs. We're not going to have jobs report this week, even though it's the first of the month. We'll have the first full week. So next week, the following Friday, which will be the 7th, I guess, of March, we will get our jobs report. We'll get our February jobs report. So ISM data, University of Michigan consumer sentiment, that's going to be a driver on Friday. Now let's take a look. This is the point where I'm going to take a look at some other markets. I want to take a look at gold really fast. Gold has been very, very much range bound. I think 2035 is going to be pretty key resistance, and 2000 is support. And if you don't know where I get those numbers, let me just go ahead and do it for you. So we're in a minor descending channel, but there's not a lot to really write home about here with gold. I think support is right around, well, first of all, 2000 because it's a round number, but 1985, which is going to be this spike low, and you can see it's a 50% retracement of this entire move. 2035 is the up here around channel resistance, I think. So 2035, 2040, and that's where gold's kind of bebopping around. I think gold's going to need more of guidance from the dollar and probably rates to give us more flavor on what we should be expecting with gold. But if yields continue to move higher, if real rates continue to move higher, and the dollar continues to move higher, gold's probably going to slump back below 2,000. That may be my expectations. But we looked at the bond market, we looked at the 10-year earlier. You have to go back if you need to go back, and yields still point like the 10-year is going to go to 450 roughly on that double bottom. So therefore, I would think that gold continues to drift lower near term. Now we talked about the blow off top potential with the markets. I want to talk about the S&P. We're going to go back and reference the S&P in a little bit, but technically speaking, we're at channel resistance, yes. But once you start breaking above channel resistance, then that's when you start opening up, sky's the limit. And again, I can't really argue a bearish stock market right now, nor can anybody else. And that's why, other than valuations, I mean, if you start looking at valuations of some of these companies that are making money, you're like, okay, now that's getting a little frothy, right? But the market doesn't care about that right now. So what I would be looking at, early this next week, if we do take out this channel resistance, we take out 5,100 in any type of meaningful capacity, the risks are that you start building for a move towards 5,400 in the S&P. You can probably do this because we're nearing 5,200, which is see this move, the top back in January of 2022, right? There's the low of October of 2022. The 127% extension of that entire move comes in at 5,200. So that would be at minimum. That looks like that's where we're going. But realistically, if we get some sort of blow off top, I think that this is the major target for the S&P. You're talking 5,400 to 5,600. Now, where does that put the NASDAQ, or where does that put the Dow? Well, I'm going to just say this. Come listen to our daily shows every day, because we talk about all the different indexes. One thing I will say at this point in time, you know, a lot of economists expected the Russell 2000 to break out this year. It still is languishing around. It still has not broken through resistance. We're not even close, matter of fact. Well, I guess we are. I mean, we're close, but you know, we can't even break above resistance in the Russell 2000. It's scary, you know, because that just shows you there's just a few stocks that are driving this entire move. You know, a lot of our mid-cap, small cap stocks here in the U.S., they are not in the driver's seat right now. And so if stocks do come down, I would expect that weakness shows up here first near the Russell 2000. So just keep that in mind. Now, one of the other things I want to point out before I move along, Bitcoin has stalled around the 53,000 level after actually, you know, breaking out. I haven't talked about crypto a lot, but we're struggling. Let's delete some of this stuff. I was expecting, you remember maybe a month ago when I talked about this, I was expecting some sort of dip down here. Didn't happen. The dip was very, very shallow. You can see we couldn't, whoops, let me remove that back. That dip was very short-lived. We couldn't even get down to where I was hoping we get down to, which led to a further breakout. Now, if you look at Bitcoin right now, the top of the range is 53,000, right? And while we're above 49,000, you stay bullish, right? So this is 49,000. We break back below 49,000, and you have to be a little careful with Bitcoin. That could be that, you know, if risk turns lower, if stocks actually start seeing some profit taking at some point, maybe we get a blow off top, and maybe we start to see a reversal in stocks. If that happens, Bitcoin is vulnerable, because look at this massively divergent relative strength. And let me just highlight it for you if you can't see it. You know, when you rally like this on less strength, that is now a risk for Bitcoin. So if stocks actually come down and people start selling things like Bitcoin to, you know, if they're like, okay, I made a lot of money on Bitcoin, but I want to hold on the stock market because I think the stock market's going to be, pullback's going to be fairly shallow. So let's just sell Bitcoin, hold on to a majority of our stock holdings. If that truly becomes the case, because they've made as much as they need to make out of Bitcoin, because remember, portfolio managers are managing risk, they're managing, you know, different asset classes. If Bitcoin starts to break back below 49,000, that might be a open invitation to start taking some profits on Bitcoin. So for those of you that trade crypto or trade around crypto, which I'm not really actively trading crypto at this moment, I think that's something that you need to be aware of. All right, let's talk about the best set, or this is the point we're going to talk about the setups from last week. So last week, I thought the markets were stretched, and I thought the S&P was at resistance, which, you know, we continue to grind up into the channel resistance. But I said last week, hey, just, you know, short equities, and we were up here on last week. We sold off, but what we did is we held the 49.20 level, and we bounced to new all-time highs. So from last week to today, I was wrong. But if you shorted it last week, you know, at the open on Monday, and you covered on Tuesday, you probably made money nonetheless. So congratulations if you did. But what I'm just going to point out about the S&P is, while we're trading above this, you know, 4,200, there's no reason to be bearish at this point. And like I said, things look like we could get a blow off top in the market. Now, if we break back below 4,900, that's where you start making lower lows, and that's where the market sentiment might shift a little bit. All right, next up, short copper at the 618. Well, China on Sunday night, here, let's coppers. That's not the copper I want to look at, because that's not the one we were looking at last week. Right here on Sunday night, the PBOC lowered rates unexpectedly on their 5-year lending. So what that did is that pushed copper above resistance. So I was wrong in copper. Copper broke out. All right, but let me also just leave you with a but, just in case you are following copper. Copper's still making lower lows, or lower highs, excuse me. And that's an overall risk in copper. So I was wrong there. Last I said long euro yen or long dollar yen while yields are breaking out. Well, the dollar yen continues to break out. Euro yen continues to break out too. There's the euro yen. Here's the dollar yen. Just continue to break out this week and hold its breakout points. So yeah, I call that one a win. All right, now let's go into what I think are this week's best setups. This week, I'm going to keep an eye on the Aussie dollar. And I want to be short. Well, I'm already short. So, I think for you guys that aren't short, actually, let me redraw this again. If the Aussie dollar breaks back below 65.40, which is going to be these high, let me zoom in a little bit. Let me pull up a 4-hour chart. I think that's going to be easier. So if we break back below 65.40 right here, this low right there, I think the Aussie dollar is going to open up for some selling. Okay, so in other words, I think below 65.40, you look for shorts in the Aussie dollar. Next up, the EURUSD on the long side. Now, I'm already long Euro Canadian, and we have remember from this week, we're going to have Canadian GDP numbers on Thursday, right? And so just remember that. Now let's pull up the Euro Canadian. I don't think I even have it up here. I do not, so let's just add it, and then we're going to do some drawing. EURUSD. Let's move that up a little bit so I know where it's at. Okay. EURUSD. What you have here is a bull flag pattern. So because you have a bull flag pattern, that means on a breakout above this resistance right here, that would be Friday's highs. That's not what I wanted to draw. I grabbed the wrong thing. A break above 46.30, 46.40 would be a bullish breakout. So bull flag pattern on the Euro Canadian. Now, most of you know I'm already long the Euro Canadian. I knew it was basing right here, longer term. If you listen to our daily shows, you already know this, but I'm gonna draw it out for those of you that don't listen to our daily shows. And why you don't listen to our daily shows, I'm not really too sure, but you should. You'll see I'm just drawing everything that everybody already knows, and if you didn't know, then you didn't know. You weren't at our daily show. But you can see we have a lot of support here at the long-term 618 retracement. We're basing, holding that broken trend line. Now we're developing a bull flag pattern. Looks like we're going above 147. So long Euro Canadian on a bull flag pattern. Next up, and last but not least, one of my favorites that I'm not in right now is the US dollar South African rand. Now, what you're going to notice about the US dollar South African rand is if you break above this level, which is 1940, which is going to be the highs from this week, we're trying to break out of this we're trying to break out of this triangle pattern. You can see how that triangle pattern, nice consolidation. So if we break last week's highs, it's a bullish breakout. Now I'm going to show you guys this because I've talked about this over the last couple of weeks. That's why you can see these drawings. These drawings are the same because I left them for you from a couple weeks back. What happens here is very similar to the Aussie or very similar to the dollar MEX that we were discussing earlier. You have massive divergence of this, inverse relationship that usually takes place. So what happens is if stocks actually come down, that's the S&P in orange. If stocks come down, these two should meet somewhere in the middle. So you'll probably see a continued rally. Now, technically speaking, let me get rid of this, that. Okay. Technically speaking, we're also following a channel which does suggest that if we do continue to rally, there is plenty of upside to get up towards that channel, which would be around 21. And if you think about where that is, and from a percentage move on the US dollar South African rand, that's a 10% decline in the rand value should that happen. over time. All right, guys, gals, I just want to say thank you so much for spending your time with me. Remember, if you want to try out Forex Analytics, you should. It's only $1 for 10 days. Come join in the community with me. Learn how we trade. Have people like ourselves to talk to, myself, the rest of the analysts at Forex Analytics, and all the traders in our community. It's a really nice community to have like-minded conversations about the markets, what's happening, globally on a macro point of view, technical point of view, and throw your chart, your trade ideas out there, and have people like us look at it and say, hey, that's a great idea, but have you thought about this? Or, maybe you were looking at a chart like that and you should have looked at it like this. We have a great community. We'd love you to join us. It's only $1 to try it out for 10 days. Give it a whirl. Guys, gals, if you found this video beneficial, you think it's going to be beneficial for you next week, make sure you give our team a big thumbs up, subscribe to the channel below. I'll see you Monday morning on the F.A.C.E show. Good luck next week. I'll see you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.